Let's talk a little bit, Tom, about measuring performance, measuring an investment manager as compared to the indexes, and whether past performance is indicative of what you can expect in the future, and if that's a good way to choose an investment manager.
Well, you've hit on a very important subject, and I think Wall Street has used performance as a sales tool. That's all they talk about, is what's the 1 year, the 3, the 5-year performance. And at the same time, at the bottom of the materials, they'll have a disclosure that says past performance is not indicative of future performance. Performance is very important. That's why we invest. We want to make money. We don't want to lose it. We want to have lifelong success. So the question then becomes, how is the best way to determine if our manager is good or if they're doing their job? I'll first address the issue of performance. There was a study that was done a few years ago where they created 1,000 individual portfolios, and they chose 60 stocks for each, randomly selected. 1,000 portfolios, 60 stocks. Then they looked at the performance over a 30-year period. The top 5% got 177% of the return of the market. So in other words, if the market's total value at the end was $100, this would be worth $177.
Okay.
So you'd say, wow, you must be an incredibly smart money manager. So no, I'm just an incredibly lucky monkey, in effect. The bottom 5% got 55% of the return of the market. So really the best way to evaluate money managers is by evaluating their investment process. Does their process make sense? And do they tend to utilize all the tools? You know, if a money manager says, well, you can't time the market, so we're always fully invested, then that's a tool they're choosing not to use. If they're style specific, every stock we buy is growth, well, then they're not going to be properly diversified. And you'll either have to hire some other money managers of various styles. But you want to look at the styles. Do we use fundamental analysis, technical analysis? Does it just make sense? And I think that that's, again, a change that we're seeing today over the past, in that the due diligence that we do is going to be much more on the experts than the individual choices. What you think you want may not be what it is that you need. It's probably a good idea to get some expert who understands what the needs are. You tell them what you want, and they might be able to narrow that selection down. Same thing's true with investing. There are so many choices out there that it's very difficult for the individual to do it themselves.